Tom Shaw, who's an analyst at Stifel Nicolaus, and he joins us on the line from Baltimore. But Tom, by the way, is the 7th ranked analyst on the stock. So, Tom, let's get to this Nike result. You have a hold rating here. What did you make of the numbers? Were you impressed at all?
Yeah, I was definitely impressed, and I think expectations were rising. We all knew results would probably improve sequentially with the buildup of the World Cup. We've heard obviously positive tones on the running side and some of the footwear results domestically, especially in January and February. And the gross margin comparisons were starting to get easier as the FX pressures were easing, input costs were going to look favorable. So I wasn't surprised to see strong results, but some of the components were a little bit surprising here.
Okay, well, I got to talk to you about the Tiger effect. Of course, it seems to be on everyone's minds these days, but no impact from Tiger's hiatus, probably no effect, do you think, on the sales upon his return at the Masters? Let me bring in what one analyst has to say on this topic.
I think it's a little bit more for the press and stuff to talk about over the water cooler. Tiger Woods is actually, although he's a huge figure in the sports world, he's actually, golf and his importance to the company is actually fairly minimal.
Yeah, Tom, so what do you think? More water cooler chit-chat rather than actual bottom line impacting news?
Yeah, I pretty much agree with that. I mean, Nike Golf is really 3% of their global sales. So, is it really going to move the needle if sales would plummet for a category? Probably not. Some of the research we have done have shown about 15% of people say they were significantly less likely to buy Nike product because of the Tiger Woods news. But again, when it's 3% of your sales, I don't think it's that huge of a deal one way or the other.
Okay, let me ask you about global market share because we have China's Li Ning performing pretty well. Also, Adidas, though, seeing its profit drop in the previous quarter. In fact, I think it's losing market share. Is this maybe an opportunity for Nike to take charge here?
Yeah, very interesting results here because the Adidas numbers, I think, were down about 20% in China, and here Nike is sort of plus 10 in the futures and revenue growth. Nike's just doing a great job of keeping inventory clean. They're carving out more of a premium position in the market, which can help distinguish between some of these companies like Li Ning and Anta Sports, which tend to be a little more value focused. So Nike's done a great job of that value or the premium positioning in that market, and clearly there's a lot of opportunity as they start diving into some of these smaller markets.
Okay, let me ask you about your rating on the stock, Tom. You have a hold rating still, looking at a target price of just $72. Nike's pretty much surpassed that, so you're thinking of upping this target price?
Yeah, I think numbers are coming up. That helps as well. One way we've looked at the stock is sort of relative to the market, and it's been trading at sort of a 20% premium to the market. That's sort of getting closer to the higher end of the range. So I feel like a lot of these expectations have been worked their way into the shares at this point. But again, if numbers are looking a little bit better than expected, that probably bodes well for something a little higher than 72.
It's a little bit higher than 72. Okay, Tom, thanks for that. Nice talking to you. That's Tom Shaw, an analyst on Nike from Stifel Nicolaus, joining us on the line there.